Well, good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, and we're at the 4th of March, 2024. All right, what do we say about a market like this? I guess the word rotation, because your stock indices were down. When you look at the market, and you take a look, NVIDIA was up strong, but just about all the other megas were down on the day. Apple was lower. You're looking at a number of them to the downside. Amazon tried the upside, got thrown back today even. I can go on and on down the road. Now, what took off today was gold to the upside. So you were looking at GLD take off, and most of the miners went with it to the upside. Partially chasing Bitcoin, which is approaching $70,000 again. I mean, wild is an understatement for the trade there, but straight up at this point in time. If they could figure out uses or an app that can use it, right? I was listening to Mark Cuban talk about that today. Probably even take off further, but somebody's got to be able to figure that out. And not only the app, but where you're going to use it, how people are going to trade with it. Those are the other parts you're looking at. We have a week full of information. You've got tomorrow, the National People's Congress kicks off in China. Wednesday and Thursday, we have the Fed chair in front of Congress. He'll be talking at that point. We have jobs data all week long, culminating on Friday with a major jobs report. In addition, we get the Red Book weekly sales tomorrow. S&P Global will release their February service sector PMI. A lot of people will be looking at that. ISM comes out with their data, the service sector as well at 9 o'clock, factory orders at 9, and then API numbers. So you've got your hands full in terms of data. You're going to have something for everybody. The market is still anticipating, the marketplace that is, that the Fed will be cutting rates in June, and there's more and more people coming out and saying there won't be any rate cuts this year. You're getting people even like Bostic, the Atlanta Fed president. He thinks that you'll get one in the third quarter, then a pause, and just before the end of the year, possibly another one. So there's something for everybody here, and it's a confusing time. And if you think it isn't, well, God bless you. What can I say? When you look at Chesapeake, I brought this up the other day because I was looking to see where we're going to see cutbacks, natural gas and the like, and we're starting to see that right here. And you could see how the market today went up, challenged the old high, got thrown back a little bit. The trend is still higher lows, higher highs. The support of the market comes in, starts at the 200-day average and works in layers to the downside. But if you get under 81.23, you set up the possibility of getting back to the combination then of the 80.37 down to the 79. Right now, it's around 79.86. That'll change, though. It'll climb a little bit, the 18-day average of closes. In terms of Bollinger Band, you got over it 2 times, and then you got thrown right back into the sideways action, and you are in overbought territory. Now in Lyft, it's not looking like the market wants to get back to the 18-day average. So you've had enough of a rally now to say this correction phase has ended, and now the market's looking for its footing. That's how I'd be approaching it. In the gasoline, the big question is, will the market find its support? 66.50 is that big number. If it takes out 65.84, then you go back into a sideways action for the moment. But I think the pros will try to support that price. In the financial services, as long as the embedded reading stays in place, pullbacks like these are still being bought until that reading closes under 79, and then maybe you get to a full correction back to the 18-day average to start things. In the industrial sector, you've still got the embedded reading, and you know what I teach you? That means pullbacks in the market still being bought by the pros. AMC, I'm surprised that they were today even down at all. They had a good opening of Dune. Nationwide, it was, I think, 87 million, and worldwide, almost about 190 million in total sales. And the market still didn't support this. Now, you get a pretty good idea if you can get over 450 of what I said. The market's trying to base out here. If not, and the market heads down, 398 is your next support, but then you still are opening the door for these lower numbers here. This was a disappointment day. I would have thought the market would have looked for a little bit better given the strong performance. It's the first good movie of 2024 in terms of revenue. When you take a look at the enhanced Bollinger Band here, I do think that the consumer is still a buy until the red line closes under 79. And at that point, you can get into a correction. You know my feeling on home builders. It's been good because you're entering the spring, summer months. And the builder isn't caught with inventories, waiting for people to come in the door and say, come on, John, build me a house. Let's do this and that. And they help them buy down mortgages. And obviously, if the market's thinking interest rates are peaking, that even gets better for the home builder if they in fact do peak. This big week on jobs data, I'm telling you, the market's going to be looking, is it going to be frustrated that jobs stayed strong, or did we see that January number was a one-off and they are starting to weaken? This is a very important week. In the energy sector, overbought condition. The OPEC cuts didn't do anything. The market's worried about demand. So that can all resurface tomorrow if China does a lot of stimulus, if they announce that package. If they don't announce a package that the market takes as super stimulative, then you could back off in the energy markets a little bit here. In the gold market, 2 days over the upper Bollinger Band, you haven't done that in a while. You had one back here. I was looking at it. There's no magic to this. You've broken out of sideways action. The market's trying now to say, we're not going back down here again. That 100-day average, when you look back at it, was a super important number. We had talked here about that, and that's just how it did work. Catching this trade is a son of a gun. I didn't do it. SLV, the market's also trying to break out of the sideways action. So you're getting your first good action in the metal markets. They generally pull back in time, let you take another look-see, and I think that's what we'll all be looking at. In copper, why would one take a wild guess on it until you know what China's going to do? You're stuck here. You've rallied back to the 18-day average of closes. The market now waits news. Fed's going to say something. The jobs data is going to point something. It's waiting for a catalyst to start moving. The dollar stuck at the 18-day average. Remember, I call that the line in the sand, and it's oversold. As FXE is coming up a little bit here, it's just a flip-flop. So that's where you're at in these markets. Remember, we cover these in all our research. You can get this emailed to you by going to iraepstein.com, free offers. I'm Ira. You have a great day.